Hey guys, today we're going to go over a quick lesson on cheap versus expensive stocks. We're going to be going over CHK, which is the cheap stock, the loser, and then Amazon, one of the most expensive stocks in the country. And we're going to show you the difference of what you could potentially lose versus make in these two stocks with the same investment. So just to keep everything simple, we're going to use an example that you use $2,000. For Amazon, you're buying one share. We're going to buy one share of Amazon at the all-time high at $2,000 a share, or CHK, we're going to buy it at same date as we were buying this Amazon. Now with CHK, it's a cheap stock. You have $2,000, you buy 400 shares. That sounds awesome, but let's fast forward to today, and you're down 75%. Your $2,000 is now worth 400. You were never profitable one day in this trade. You just sat through losses, and you never had any opportunity to get out break even for this trade to ever become profitable. You just kind of rot with the loss, and that's what usually happens in a lot of these cheap stocks. Just most new traders who lose money or blow up their accounts, they usually blow up in silence, and the one or two guys that make money everyone hears about, and then they think they're going to be the same as that person, when usually that doesn't happen. But in this example with Amazon, even if you were the worst trader, you bought the absolute high, there was really no setup there, and you had to sit through this Q4 correction or bear market, the most you were down was 30%. So on your 2,000, you were only down about 600 versus being down 1,600 on the cheap investment. Now the main difference here is that these leaders tend to turn it around, and they tend to turn it around much quicker than you or I have the patience to hold some cheap stock for 2 or 3 decades to turn around. This takes 2 or 3 quarters and it's back to that same price. So even if you were the worst trader, you bought $2,000 a share with your one share, you had an opportunity to get out break even. With CHK, it's never happening. And now again, you can see I'm cherry picking these names. You go and find any expensive name, you go and find any cheap stock. This example is going to continue to resurface. The cheap stocks get cheaper, the expensive stocks get more expensive with time, and the same dollar amount tends to yield the better return on those expensive stocks. And again, in this example, your max drawdown in the CHK was a 75% loss. It's going to head lower as well, and with no chance of making money. Amazon, if you were the absolute worst, you were down about 30%, you had a chance to get up break even, and you still have an opportunity to buy, like we'll be buying 2,000 probably in 6 months or a year through this level for a move to probably 3,000. So hopefully this helps you guys get away from that assumption that cheap stocks and more shares equals more profits, and you can see why we focus on stocks that are above $30 a share. And hopefully if you guys like this video, drop us a little thumbs up. Let's get back to the Getting Started program and knock these lessons out so we can move on to what's next.